joining us now. The table, Marc LoPresti. He is a CEO and Senior Market Strategist at Market Rebellion, otherwise known as a big baller on Wall Street. We will start with
I'll take that, Sarah.
Welcome.
Thank you very much.
Your ad.
I can only screw it up from here, guys. That was the highlight of the show right there.
There you are. Affordability. You hear the president talking about inflation and wages. What was your takeaway from what you heard from him? While Americans are overwhelmingly frustrated with this economy, their own personal ones and the economy at large.
I understand that, Sarah, but what Americans need to understand, and what I would have liked to hear the president say, is that the economy moves like a battleship, not like a speedboat. The president's economic policies, which are designed
That's a good thing, because
medium...
speedboats are getting droned to death.
I didn't see that one coming. Thank you very much. Thank you very much. It takes time for these policies to have long-term effect. I saw those numbers that you quoted in the A block, right? Where inflation, it started here, it went down, now we're back where it was. That's not adjusted for the tariff revenue. That's not adjusted for the fact that the job growth has been exclusively from the private sector where it needs to come. We need to look at these numbers in the context of the positive economic impact of the president's policies. And I would like to hear, and I think we will hear from the president and from the vice president, J.D. Vance, that piece of information for the public. Be a little patient. I know it's hard right now. I know we're looking at the midterms, that big popularity contest coming up. Be patient. These policies will have the impact that is desired. That's what I want to hear from this president.
Two questions. Why should Americans be patient when they were promised that he didn't have to be patient, that he was going to fix things very quickly? And two, the tariffs aren't isn't the public paying those tariffs? In other words, they're the ones having to pay. Yeah, it's coming in, but they're also the ones paying for it.
Well, so I don't think that's actually been proven, Sarah, right? So what we look at, so I'm a big baller on Wall Street.
It's not a tax on people.
You're going to say that they're by definition inflationary. I've heard that before. Listen, I was here with Abby on Liberation Day.
The Federal Reserve Chairman said it.
Well, I don't agree with most of what the Federal Reserve Chairman says. And I cannot wait for him to move on. I cannot wait for him to move on. He waited at least a year too long, in my estimate, to change economic policy, and then embarked on the fastest pace of rate hikes in the history of this great nation. That is not something that you can undo with an executive order or executive fiat. It takes time for these things to happen. Market forces are what they are. And this population should give the president time for these policies to take effect. And look, as I said to you, I was here on this set on Liberation Day, and the rest of the panel said, we're going to go into a recession by June. We're going to go into it. It's going to be a U-shaped recovery. If there's a recovery at all, it's going to be mass hysteria, dogs and cats living together. And I said to Abby, who I have great respect for, have me back in June, which she did. Have me back in September, which she did. And we will see what the outcome is. The reality, we had a V-shaped recovery. We had 3 quarters of corporate earnings growth, quarter over quarter, that were historic.
Yes.
And earnings growth showed that corporations do not, ipso facto, need to pass the cost of tariffs along to the American public.
They don't need
to.
When you say corporations are making the money, the problem is the American public is not. And that is where the problem enters.
He's speaking like a Wall Street guy.
Right.
If you have a stock portfolio in Wall Street right now, you're doing very well, whether it's because of an AI bubble or whatever reason. If you're looking at your stock portfolio, you're feeling pretty good. The problem is that Americans who don't have a stock portfolio, Americans who don't have thousands or hundreds of thousands of dollars in savings and are having to make do with what they earn, with unemployment numbers going up, with grocery prices going up because of tariffs, because the doll prices going up, are having sticker shock because, you know, they're looking at the cost of health care going up 100%, 200%. And they don't know how they're going to afford it. There's too many of them that are going to go naked.
I feel like
there's a huge gap between the people who are in the stock market
that's a false
that are your
narrative.
clients.
That's a false narrative.
I think you live in a bubble.
Teachers, firefighters, people that have pensions, which are average, everyday, blue-collar people, as well as professional white-collar people, they are in Wall Street.
Yeah, but they don't control their stock portfolio like I do. Or
yes,
well, they
but
shouldn't.
here's the thing.
Hold on a second. Here is the number.
And they're not getting the dividends until they have to. They're not getting them. So right now they have to live on their paycheck.
It is. Here is the number. About 62% of U.S. adults own stock. And that includes people who are, but that leaves a hell of a lot of Americans who don't. And for many people, it is what they use in retirement. It is
Yeah,
not
it's not
something you
what they
use
live-
when you
yes.
go to the grocery
That's
store.
right.
I am not a Wall Street baller, so I will take what you say as your theory of the case. I think, again, last year there was a lot of people, a lot of economists that had a different theory of the case around be patient. Joe Biden's economy is moving. It is really, really hard to be patient when your bank account says 0 or negative and it keeps going lower and lower. People, whether you have stocks or not, because when you go and you cash in on your retirement, you get a penalty. It's not a false narrative to acknowledge people's pain.
100%.
And pain and patience don't really go well together. It's a real hard thing. And I worry that there is just this disconnect with most of Americans. There is like a small percentage, probably if we're at this table, we are not even in the pain place and proximity to pain, but we know people. There is a disconnect on really what is happening on the ground, not just in blue states, not just in red states, but at kitchen tables, at homes where parents are not eating a meal so that their kids can eat. And it is really hard to understand what a U economy, a V economy is when the only letter they see is a O because it's a 0 on their bank account.
So here's my question. I totally respect that, and I sympathize for that. I really, really do. But the economic driver of growth, the biggest job creator in the history of this country, right, is private enterprise. And if we bring interest rates down, and this is what makes me so crazy, corporations' largest cost of capital, by and large, is their cost to borrow, particularly small business with 50 or less employees, which is also where most of the job growth happens in this country. When you have interest rates that remain artificially high and inflated for as long as they have because of bad economic policy, you are stifling job growth and you're helping to perpetuate that problem that I 1,000% sympathize
because private companies drive growth in America. No question about that.
That's right.
The amount of growth, the amount of wealth this country has generated over the past 15, 20 years is gargantuan. It's beyond imagining.
It is.
And far too much of that money, this is what the American people have been telling politicians for years. Far too much of that money went to far too few people in far too few zip codes. There's this obscene maldistribution of wealth.
Yes.
And now that the pinch is coming as prices rise, and they see people beyond the imagining of world history getting rich, and Trump palling around with them and rewarding them more, I'm not sure how long their patience is going to wait. There is a populist revolt. He was elected partly by it, and he's not addressing it.
Well, I think that's part of why we saw the speech we had today. He saw what happened in November. He saw what happened in New Jersey. He saw what happened in other parts of the country. There is a concern, right, that the midterms will end up not so great for the Republican Party. If you look, historically speaking, at the implementation of tariffs by presidential administrations and what happens in midterms, it's not great. It's not a great narrative, which is why I want to hear this president and the vice president say, give it time. It is working. We didn't have the tariffs drive us into a recession like so many people said. And on an inflation-adjusted basis and a tariff revenue-adjusted basis, we're doing pretty well.
I just want to end with this stat, that the top 10% of U.S. earners account for nearly 50% of all consumer spending. That sort of K-shaped economy is what people are complaining about, because that's a very few that are fueling the economy to make things like Wall Street look good.
By the way, I just read a few tweets. He interrupted the finale of Survivor.
Ooh.
4.5 million viewers. There's a lot of pissed
people.
off Survivor fans.
Only you, Anna, would know this fact.
I shaved my legs for this.
Like 50th season.
For this old man to come and scream at me about how everything is great.
Anna, there's people out there saying, get off my lawn now.